Welcome to Southpod, the first and foremost podcast created to tell the story of tech innovation and scalable entrepreneurship in the American South. Southpod is hosted by Jon Yarian and Stanfield Gray and produced by Dig South Media. Dig South Media is the South's tech hub, the place where leading global brands connect with the region's most scalable startups. This week, Southpod welcomes J.D. Moriarty, CFO of LendingTree. This episode was recorded live at the 2019 Dig South Tech Summit in Charleston, South Carolina. Visit digsouth.com for details and connect with us on social media at Dig South. Now, let's welcome JD and get on with the show.
Welcome to Southpod. I'm Jon Yarian, your host, and we are recording from the event itself. We're at Dig South at the conference in sunny Charleston, South Carolina. And I am pleased to be joined by J.D. Moriarty, who is Chief Financial Officer of LendingTree. And I want to begin with a question about your relationship to the South, because I don't think you have much of one, just as a guess. But here on the pod, we're very interested in geography, we're interested in culture and southernness, not that we would discriminate if you don't have any, but not from here, is that right? But work and life has dragged you down as far south as Charlotte some of the time?
Yep.
And what's your experience of that? What, is it exactly as expected? Is there anything about it that was surprising or different for you in its southernness?
No, it's interesting. So LendingTree was founded in Charlotte because when it was founded, that's where the banks were.
Yeah.
And the initial contention was we needed to get the banks on the network, and I think Doug thought, great place to live, like the South in general. He went to business school at Darden at UVA, so he had an orientation toward the South. That's how LendingTree got there. In terms of my coming to Charlotte and to the Southeast in general, it's a pretty easy place to move to.
Yeah, it's super easy.
And in particular Charlotte, because there are so many transplants there, and there are so many people who have escaped the Northeast. And the same thing's going on here in Charleston, for sure. So it's not, they're both pretty welcoming cities in that respect, and we're finding it actually becomes a bit of a recruiting tool as well.
Yeah, it's interesting. And I don't know, do you subscribe to the theory that that headquarters location or the place where the primary workforce, interacts, does that have much of a relationship to performance or habits or ways of working, or is there nothing to that?
Well, it's interesting. It's tempting to say no because we're in an environment where you need to be able to work remotely, et cetera, but location does translate into culture very often, right? So for us now, 40% of our employees are in Charlotte. That's because we've made a number of acquisitions and grown in all these other regional offices that aren't so regional anymore. We now, in September of 2017, we acquired SnapCap here in Charleston. And we're thrilled that we're actually expanding that office here. But so when I see the collaboration that goes on in that office or in our office or in our office in Seattle, that's important. So location does matter, but I think it matters that you have good critical mass, in each office.
Yeah, I would agree with that. We'll come back to the geography and your own story of what brought you to LendingTree and some of your time in Charlotte. Before I do it, we've got a lot of listeners and viewers who hear LendingTree, and quite frankly, what probably pops in their mind is like a TV commercial.
Yep.
They have sort of a superficial sense of what it does. Can you give us, maybe not the boilerplate, but your explanation of what makes this company interesting or innovative? Sure.
The initial premise behind LendingTree was essentially the common app for your mortgage loan. And Doug actually had the experience of, in 1995, trying to buy a condo in Pittsburgh, looking in the newspaper, seeing those rates, then going to the bank and realizing that the rates were a fiction. Okay, so that was the initial conception. So what people might associate with LendingTree is when banks compete, you win, right? That tagline has been pretty effective.
We remember that part.
They remember that part. Now, what they probably do not realize, and actually our TV commercials have evolved over time. Yeah. We had Lenny the Lending Muppet. Then we had a number of commercials where I used to say we've got Lenny the Lending Muppet, and then we've got our other Muppet. His name's Doug. Doug was in the commercials last year. And then, and he did a great job in those commercials, but that was a bit of a transition for us from it being all about mortgage to it being about the diversification of the company. And if you see the commercials today, they are much more about LendingTree for all your financial needs, because as we've diversified as a company, mortgage is now 20% or less of our entire business.
Yeah, it's interesting. What is that driven more by an internal model of innovation and expansion, or the fragmentation of a consumer financial market that's just completely different than whenever Doug was looking at a newspaper, which sounds like a story from the 80s.
Yeah.
I could be wrong.
Well, so it's driven by two things. It's driven internally in that there are businesses like our personal loans business that we've grown organically. We've acquired a number of businesses. And if you think about it, fundamentally, if we're going out and marketing to get customers to all of our lenders or institutional partners, we are about customer acquisition at scale. So if you're in one financial product, you certainly should be in the adjacent ones, right? So it makes sense that when you're in mortgage, you should be able to have some marketing advantages getting customers for credit card and in turn for personal loan. And more recently, we added insurance. And so what we're trying to do is really take a really different orientation to the business from when it first started. The fundamental problem when you're just a mortgage business is how often does your customer come back and transact, right? And so now everything is oriented around the journey of the consumer, and we should be able to help you along the way. So we now have an app called My LendingTree. We've got, over 10.5 million My LendingTree members, and then the idea is that you should come there to shop and compare for everything.
And as as we're hearing you speak, it's interesting. There's two things going on at the same time. One is we're literally referencing national TV commercials.
Yep.
We're talking about the growth of this huge and successful business, and you're touching on evolution and innovation that could kind of resonate with somebody in a startup or a smaller company that's looking to expand and looking to find opportunity and looking to serve customers. How does that work inside of an organization that, from the perspective of a lot of the companies here at Dig South, and those might be listening, is, kind of vast?
Yeah.
Like, where does that energy come from? How is it directed in any sort of uniform way, and who's steering it in such a spread out and complicated system? What does that look like from the inside?
Well, it depends on the type of acquisition, right? So for some of our acquisitions, many of the companies that we've acquired nine companies since 2016. Many of them expand in one way. They're dependent on one marketing channel because they're doing one thing well. But they don't dedicate the resources to diversify their marketing, for instance, or they basically don't have the resources to do it. The idea is that we will only acquire something that we can make grow faster. Like, we shouldn't acquire something that's already peaked, right?
Yeah.
And so fundamentally, being part of the platform should give them resources or advantages in their marketplace to be more successful, and that is the key criteria to virtually everything that we acquire. Now, culturally, we have to look at every one of these and say, is this something that we're tucking in, or is this something that we're trusting to be our guys? So insurance. We didn't have a critical mass team doing insurance. So we just recently in October acquired a company called Quote Wizard in Seattle. They're really good at what they do. That is our insurance team. We need to find ways to integrate them without disturbing their momentum. So when you speak about, how do you make an entrepreneur fit into this culture, you give them resources, you make them more efficient, but you don't kill the entrepreneurial spirit. And so Doug talks about it all the time. He'll use the expression, entrepreneur without the headaches. And that's what we're trying to achieve.
And what, and you've answered it in part. It sounds like there's something all of these acquisitions have in common, right? Minimally, it would be unrealized potential. It would be something that you can speed up. It would obviously have to be adjacency to your core business. It would have to connect. Are there other things that you or Doug or the team are looking for, things that relate to like the ethos or the belief system of LendingTree, the original story about Pittsburgh and frustration? Is there something in there that connects these?
Fundamentally, they should be businesses that are oriented around helping the consumer. Fundamentally, they should be things where people feel like it's a better customer experience because they interacted with us. It can't just be the arbitrage of we can get them a traffic generation advantage, and so we can make this business go from 20 million to 40 million.
It certainly could, and it isn't. And is that Doug? Is that you? Like, what is it? Why isn't it?
Because if that's all we're doing, we're going to end up at the end of the day with an amalgam of companies that don't have a lot in common, and that usually ends poorly. It will help you for a short period of time. It's not a good strategy overall. These businesses have to help each other in a much more organic way, and otherwise, you could just be a holding company, right? We're trying to be something more than that. And if you look at our category, the interesting thing, and we started talking about this in 2015 when I was at B of A Merrill Lynch, and I worked with the company to do what we called in my old job a re-IPO. Because LendingTree has an interesting history. The company went public, Doug founded it at the end of 1996. It went public in 2000 in an environment where very, very small companies were going public, and many of them failed after going public. In today's environment, there would have been tons of private capital available, right? And Doug is one of the companies, LendingTree is one of the companies that got to the other side. And in 2003, LendingTree was acquired by Interactive and did quite well at the outset. From 03 to 05, it was certainly one of their more successful acquisitions. And then Doug had a big job at IAC, and along the way, LendingTree, like a lot of companies, got caught up in what was going on in mortgage in that 06 to 08 period. And in 2008, IAC, in the midst of a reorganization, spun out 4 companies, and LendingTree was one of those companies. So he had the unique scenario of getting his company back, which doesn't happen very often, right?
Boy, there's a lot. That phrase is doing a lot of work, getting his company back.
Yep.
There's a lot
there
going on in there.
But he got it back, and it was public.
That would be like getting divorced and calling it getting your freedom back.
Yeah.
Like that's a way of saying it. But was there? Because I've got to imagine, and we keep referencing this mysterious Doug. Can you maybe give us a full name? And
sorry about that. Yeah, Doug Lebda is our founder and CEO.
Yeah, terrific, gifted guy who, in quote unquote, getting his company back.
Yeah.
Was there something discovered in that process? Was there a new fire was lit? Was there something that changed, or was it more like, I've got this circumstance out of the way, and we're back to kind of being directionally liberated to fulfill on the original ethos? Or is it none of the above? Like, what did that mean for him and for the team he assembled?
It's more complex than that. So he got the opportunity to get his company back, but it was spun out as a public company that didn't really belong as a public company.
Right.
It was what we used to call an orphan stock.
Right.
Okay, and the stock went to less than $2 a share.
And friends, you don't really need to know what an orphan stock is to know it's not a compliment. Please go on.
So an orphan, you don't need to know what an orphan stock is.
You got the picture. It is optimal.
Nobody cares. It is public.
Correct.
And nobody cares. So it leads to another expression, which is, I said, so it was not until 2013-14 that the market started to care.
Yeah.
And it was in 2015 that we did this re-IPO that I mentioned before. And at the time I said to Doug, you had for all these years, you had all the disadvantages of being public and none of the upside. And it wasn't until 2015 you started to get the upside. So we've used being public quite successfully, but after years of pain.
And when did you come on board?
June of 2017.
17. So you're part of this cohort, this post. There's all this history and what you share. Now you're part of this team. What is the mantra? What's the charter of this group that is in this new position after all this history? What
basically one word, which is scale. Right? This whole challenge is about scaling. And when we did at the time of our equity deal in 2015, our market cap was around $1 billion. And I remember saying to Doug at the time, listen, going from 0 to $1 billion effectively twice is incredibly impressive. Here's the interesting thing. Going from $1 billion to 4 and 4 to 10 is actually going to be more interesting and weirdly easier.
And that is a relief to hear. I've often been worried about that second to fifth billion, and I'm glad to know that won't be as hard. Well, let's pause on that track for just a moment, and I want to bring it back here and make it a little bit more directly relatable to some of the audience, because
sure,
they're interested in a journey that would have you involved in some of these decisions, thinking about scalability on this kind of a stage, and knowing that you didn't just like appear out of thin air in the role you have today. What, without going through every detail, what was the journey that more or less led here, and what would attract you to LendingTree? Because I'm sure you were doing something pretty fun before this. LendingTree's got some challenges, and you went for it. So what's that journey like, and how'd you end up here?
Sure. So I was all in over 22 years at Merrill Lynch and at Bank of America post-2008. So I lived through the events of 2008. From 2001 to 2017, when I left, I was doing largely the same job. And I was in equity capital markets. That's the business inside the bank that's responsible for taking companies public and for doing equity deals for existing public companies. And my last job, the last 3 years, that was the group. I was in charge of that group for the U.S., and that's what I did. And I spent time with technology companies, and that was the fun part of my job. That's a great job. It's one of the few areas within finance where there's a lot of gray area in terms of success. It's not a binary outcome. I used to say the best thing about our business is that most of our clients only go public once. They really care about the outcome, and they actually take advice. And so, I used to joke that twice a year I'd have a founder CEO who would cry upon their IPO and actually give you a hug. There aren't many jobs in finance that are like that. You consider yourself pretty lucky.
Well, no, there's a lot of jobs in finance with tears, but not the way you described it.
Yeah, exactly. Yeah. But so I had the good fortune to have one of those jobs in finance, and that was a good job. But I was doing it for a really long time. And I'm a big believer that you have to seek out new skills, and you have to be willing to try new things. I also am a big believer in incremental progress. Think about blocks of time. And so, when I left, I was 44. I'd been doing this for a really long time. I was good at it. Candidly, I was probably bored. And this was a new challenge. And, so it's been great.
You said blocks of time in a way that suggests you might literally mean that. That might have something there that's more than just, do you think about it in decades or segments? Is it phases of life?
So I tell, it's funny. I have, I'm the youngest of 7 kids. As a consequence, I have nieces and nephews. I have 13 nieces and nephews, and grown, and so I find myself giving a lot of advice, and also to kids who worked for me, right out of college.
Sure.
And my advice to them is, think about things when you're right out of college. Think about things in 3 and 5 year blocks. I don't think that advice it becomes invalid just when you get older. You have to actually follow your own advice, right? So I think you think about what skills you're acquiring, and if you're kind of running in place, which I probably was, you have to actually look forward and say, okay, what do I want to do for the next 10 years? What does the next 5 get me towards that goal?
It's so interesting, and there's a way to hear that and just kind of hand wave it. And yeah, sure, blocks or whatever, 3 years or 5 years. And what I'm sensing is there's a commitment to that on your part. It's real. And it might even be real enough, it exists in a spreadsheet or on a piece of paper or something. Maybe it's in your head, but it's
more in my head. But
it's a real thing. What is the difference that kind of thinking make for you? How is that an advantage over colleagues and peers they're just kind of in it? They're just doing it.
It's an advantage in the sense that you're investing in yourself, right? And I have a lot of friends in finance, and finance is an interesting world because it's an industry that rewards you for specialization. And guess what? When you come out of college and you're 23 to 30, the last thing you want to do is specialize and get pigeonholed. So strangely in that world, you have to specialize to get rewarded. And so those two things are, so people have to balance that, and they have to say, okay, I'm going to get these skills, but I'm going to keep my head up and make sure that I'm developing other skills. That's kind of the way that I look at it. I think a lot of my peer group got caught doing the same thing. And then it's about willingness to take a risk and do something different.
Yeah.
And obviously, you're constantly balancing that willingness to take a risk with what you have and what other considerations you have in your life.
Well, yeah, I'm glad you mentioned it, because why make the jump to LendingTree? I mean, did they chase you down and say, we have to have you? Or
well, my situation was very unique in the sense that I was able to I worked with many great clients over the years. That was a lot of fun. And I used to always get the question, hey, why haven't you jumped and gone to work at one of these companies? Doug and I have known each other for over 30 years. We went to college together.
Oh.
And so there was obviously a comfort level there. And the big thing that we spent a lot of time talking about, we started talking about this in probably 2015, 16. He would say that he talked to me for 10 years about it. And the reality
it's
is
becoming clearer.
Yeah. So but the reality is, like, after 2015, 16, I started to think, okay, can that business scale? Would that be fun to be a part of it? I became convinced that it was a big enough business where I wasn't just a guy showing up because there was a job.
Yeah. Well, and it's so interesting, and it dovetails. I don't know when people are going to hear this. We've been recording a lot of podcasts all in one day, and this theme of trust has come up.
Oh, yeah.
And we're talking about immense sums of money and complicated transactions and deals in this world of finance that some of our audience doesn't have much of a relationship to. And I'm kind of just talking to a guy who trusts Doug. I mean, on some level, I'm talking to a guy who knows a guy and believes in what he's up to enough to move out of something that he was good enough at to, by your own admission, maybe get a little bored. Like it didn't sound unsafe, right?
No.
It didn't sound threatening.
No.
But I have to imagine if that trust wasn't there, if that relationship wasn't there, it might not have worked out the same way.
Yeah, that's right. I mean, I think I get a lot of leeway to step outside the bounds of traditional, just this is what a CFO does, right? One of the things people in my old job would say, the job you want is not just the CFO job, you want the strategic CFO job, right? And so I get to be part of that, and that's what makes it more interesting.
Well, I love it. We're going to get you out of here in just a second, but before we do, give us a sense of the road ahead. You guys have bought umpteen companies. We've talked through the characteristics. We have a very clear directive, which is scale.
Yep.
So, give me a little picture of this global domination you envision, your part in it. Where's it all going?
Sure. So, ultimately, as I said, for our partners, we are customer acquisition at scale. If you look at what's happening, a lot of the financial institutions that we interact with are just moving online with their marketing, and more of their spend is going to be online. We want as much of that as possible to be in a comparison environment like what we create, because we know that benefits the consumer. The great analogy is to the travel industry, to the Expedias of the world, to the bookings of the world. And it's sort of strange that financial services does not have a comparison. We're the closest thing there is, and our market cap is a fraction of those companies. And so there's really an opportunity there for us to grow into that market dynamic. That's the opportunity.
I love it.
Thanks.
J.D.
Thank
Moriarty, LendingTree, thank you so much.
Thank you.